So tomorrow morning, Newsmax, the extreme Republican-leaning news channel, will be going public. Had a family member go ahead and ask me to review it. So let me hurry up. Okay. First things first is this. If you choose to buy this, I want you to have great caution. First things first is this. The way that the current economic cycle is playing out in terms of when you're looking at stocks and other assets, they're being held for private more longer, meaning that the huge exploding, growth isn't really there. Back in the day, as an example that I gave to the family member, was when you look at how long it took Google to go public, and then you look compared to today in terms of its overall growth, you see that it's done an amazing job. I'll put it right here. Now, imagine if they would have held it for longer and for private, like what was being done with Twitch and then a couple of other, major private companies. So the reality of the situation is that usually, obviously, when it's been private for a long time, I believe this company's been around for 15 years, if I'm not mistaken, maybe the growth is probably squeezed out. Maybe there's more. I mean, we absolutely can be wrong. This is just a basic analysis with all the information that I'm given, hopefully trying to help people understand, deep dive into a company, just so you don't look at the name, think about vibes, and then your portfolio is down heavily. First things first is this. They're trying to get a market cap, if they're successfully able to sell 70 million shares at $10 a pop tomorrow morning. They'll be able to launch their company, get everything going. The entire valuation of the company is estimated to be $1.19 billion. First warning that I want to give people is that there is a 6-month, 180-day lockup period. So what does that mean? So what that means is that within 6 months, this is when people in the company that own vested shares, this is, some of the actual corporate board members, maybe the founders, other investment groups, other people in the deal, whether the bank's got some shares, whatever, all of them get to participate in starting to sell it if they want to. Maybe they will, maybe they won't. Maybe it might impact the float, maybe it won't. Maybe it might be negative sentiment, maybe it won't. All the things just to keep in mind, because, especially when you're on your own, trading platform, you don't have your app giving you this type of analysis, breaking it down, saying, hold on, let's think about it. Okay, now, as of June of 2024, this is from the information I pulled. This is before taking into consideration the private valuation that was offered to them. This was a private series round, and if they could possibly raise $75 million on top. This is before any of that. Okay, so the company, in terms of its cash and equivalents, has $6.65 million cash on hand. That is a little bit. That is a little bit for a public company, making sense why they needed those two avenues of selling equity, stuff like that, in order to encourage, investors today to want to buy it. A $6 million straight off the bat is a joke. You're telling me they only have $6 million in cash, but then they got a $1 billion valuation? $6 million from $1 billion. Someone tell me how that maths. Now, you told me they made $200 million a year plus inside of free cash flow, I would say, oh, okay, by the way, they don't. So, first things first is this. After their private placement has taken place, after everything, let's see here, that'll actually be over $205 million. If I'm not mistaken, I'll try putting it here. Please excuse me if I'm wrong. I'm just rushing out to get this video out before 6 a.m. New York time pops up, and all of a sudden the stock's trading. It could bomb, it could do great. How the fuck should I know, right? Okay, so now we're at $205 million after the private placement. Now, if they're successful in their stock offering, they'll be moved to over $274.20 million after their IPO goes successfully. I'll put the IPO goal right here. Okay, now, here's the situation at the end of the day. Let's go ahead and let's add up all of their debts and liabilities in the entire company. As of right now, that would come out to be, let me find that right now, little less than $100 million. They have accounts payable of about $19.6 million. They had a settlement. I'll put the article here. They have a settlement litigation in terms of liabilities equaling to $39.4 million. They have the lease liabilities of $11.9 million. They have a line of credit of $0.5 million, and they have deferred revenue, meaning that this is revenue that obviously these are basically money that's owed to them, right? That is about $17.97 million. Now, in terms of that, let's speak about their operating cash flow. So, obviously, the $6 million would actually, the $6 million would have only been able to cover maybe just their line of credit, and they would have been short on their liabilities. There still isn't their payables that are going to be coming due. This is still not the settlement liabilities. So this is, again, information that we should probably be a little bit concerned about. For the last 6 months ended on June 30th of 2024, they have operating costs of negative $7.43 million, meaning that if they never raised any of that money, that $6 million, then they would have immediately gone bankrupt. You're telling me this company is worth $1 billion, but it would have went bankrupt if it didn't have the private placement of additional capital in an IPO? Really, Newsmax? Okay. All right. Whatever. So in addition to that, when we look at their investing is looking like a little bit less. Let's see, 0.11. So if I'm not mistaken, again, please excuse me if the video is wrong in any form of a way. If you have any extra comments, please, add them in here. Okay. Financing, they have about $7.94 million. So essentially the operating and the financing kind of, pretty much, handle themselves in terms of that. So their overall net cash change is about $0.61 million. So for their full year of 2023, if we went 1 year prior, there was a change of about $1.99 million. Their operating actually from 2023 to 2024 is actually higher. In 2023, their operating was negative 3.76. Now today they're at 7.43 negative. So that is also increasing. Something just to take into great consideration. Now, in terms of debt, the beautiful thing about debt, even though I am not a fan of it, I can't explain to all of you how many fucking companies decide to just balloon themselves into this oversized fucking debt, and how much of our shadow banking system is probably influenced by people having hedges and different, what was it? Not, maybe CDOs, something like that. Anyways, in terms of all the backroom deals and then the other mechanisms built into the market so people can try to limit their overall liability in terms, if a pension fund happens to own $100 million worth of different bonds, those are all cut up into different tranches. And then going from that period moving forward, obviously they're going to try to hedge to the best of their ability, so they don't get screwed. So, excuse me for my water. Okay, so moving on from that, when we're looking at the settlement agreement, this is the amounts that are due in their order of such. In 2024, they paid $6.68 million. In 2025, they paid $7.28 million. In 2026, they are expected to pay $7.28. 2027, $7.28. And then again, 2028, $7.28. And then in 2029, the last is $3.64 million. So in subtotal, over the next decade, you'll have to spend $40 million on a settlement agreement. Nice. Okay, now for lease obligations are about $11 million. In 2024, you're looking at $2.23 million. 2025, you're looking at $4.35 million. 2026, you're looking at $3.33 million. 2027, you're looking at $0.61 million. And then in 2028, you're looking at $0.29 million. In addition to that, let's go ahead and look at their overall their annual operating cash flow. So even if we turn around and have starting cash. Now, in terms of this, let me actually explain one thing really, really quick. So then what I do is I gather what's the cash and then what's the debt. When I go ahead and understand how much cash on hand they have, how much they have inside of their investment accounts, do they have any treasuries, stuff like that, then we looked onto their debt. Now the next question is let's, all of the numbers I just gave you, let's line them all up. Let's add the burn, because they are currently running a burn situation. Let's add in all of the operating costs in terms of all the contracts, all the salaries, all the people, all the equipment, everything you can imagine to run Newsmax. How much is that going to cost us? Then in addition, the other thing that you need to keep in mind is all the lease payments, all the liabilities, everything that could be underneath the sun. So what I do is I take all those variables and then I just simulate it forward. Now, this is the part in the video where I want to say that if you do your own research, don't be listening to me because I can be wrong. The main goal for you is to focus on what's the reality of the company and how much oxygen can they have, and is the room depleting that oxygen? Because if they don't have any more oxygen left and they just turn around and then they choke and die, then the company is worth nothing. So I take all the variables that I told you and I just do one straight math in terms of their cash, the cash that they raised and their full total. And I want to see if nothing changes until now to 2029, what is their situation going to look like? And what I'm looking for is that in just keeping everything relatively the same, whether it's 0% growth or it's a 5 or a negative 5% growth, when we're in that middle. Now, mind you, some companies can swing further than that, as I'll show later. But one of the most important things we need to keep in mind is just with the numbers we have, can they actually maintain operations, and how much cash on hand will they have if the burn doesn't stop? I'm not saying the burn will get worse. Historically, the burn is showing that it does get worse. In 1 year, they've almost doubled their burn. So in the current situation, if you're looking at, let me go ahead and do the math here. Okay. All right, everybody. Sorry about that little cut within the middle of the video. I actually realized that my math calculations here were wrong. So I had to go back, make sure everything was correct before I gave any of you disinformation. Okay, so the situation is this. In 2024, they're about $17 million short. Don't know if they deferred it. Have no idea. Tried to look into the PDF, didn't quite get an explanation about what happened, but they're here. So nevertheless, something was maintained and handled. Though I'm sure 17 million is fine. Okay, so in 2025, they're going to be having almost a $27 million in terms of what is owed, whether that's the operational burn in terms of other liabilities. They'll be having probably around $249 million in 2025. 2026, they'll have $223 million left over after everything. 2027, they'll have 200. 2028, they'll have 178. In 2029, they'll have about $159 million. So, once again, if we go down this course, and if I'm correct, and if the revenue keeps going like this, that means the share price might be doing the same. Obviously, this is speculation, so it may actually do the complete opposite. Maybe it might be the hype of the business, but from my experience of seeing a lot of companies in terms of them recently IPOing and how they turned out, it hasn't been very well. Some of them have done very good, but those are good businesses, right? They're still operating at a negative. So again, just a very good, a very good fair warning for you guys in terms of what is going to be going on. All right, hey everybody, here we go again with my ghetto YouTube video of cutting in and out of all these videos. Just wanted to write one more thing just as an extreme fair warning. Look at how much will be left by 2029. Look at how much they currently want it as the market cap, and do your own independent research. I wish all of you the best of luck. If you're planning on, for some reason, buying, let's say, like 100 shares, probably cut it down to about 25 to 50. It's not necessarily that this is like a flaming dumpster. It's just, again, without the extra secured, private money and the IPO, I don't think they would even reach close to the valuation. So just some food for thought for you guys.